the market rising higher yet again yesterday. Run us through some of your expectations for today's trading session.
Morning, Alishia. I expect the market to continue the trend. It has been done for the last 4 trading days. It's led by growth mainly in the banking sector and food and beverages sector. It seems investors are renewing interest in both those sectors, and that's what's driving the market upwards, and I expect that to continue for the rest of this week.
The AMC Bill has, of course, not yet been passed, and some are saying that this could threaten, to an extent, the sustainability of the rally we're seeing. But at the same time, we've got most of the industrials still looking to boast strong long-term prospects on the back of increasing demand and a growing economy. So how do you see things playing out on the markets moving forward? Because the AMC is just one of the very big X factors at play at the moment.
Yes, you're right on the AMC. On the banking sector side, the two really big issues that might dampen investors' expectations, and that's the AMC, as you mentioned, the lack of the fact the bill has been inaugurated, although it was expected before Christmas, and also the common year end, which is expected, results expected to filter in towards the end of March, middle to end of March, when all the banks will start releasing their results. But based on some quarterly projections that the likes of FCMB have released to the market, where they suggest that they'll be back on a profit footing, I think that's reassured investors a little bit. On the industrial side, most of the growth in Nigeria has been in non-oil economy, and the growth in the food and beverages and industrial sector is showing that. And companies like PZ, Unilever, MB, they're announcing some quite strong profits and revenue growth and profit growth, and that, I think, that's giving a fillip to the sector.
Well, what businesses have learned, certainly in that industrial space through the downturn, has got to have been efficiencies. I mean, for one, you've got the growing popularity of more cost-effective power generation strategies coming into effect. How do you see these industrial players handling cost efficiencies right now, and are you happy with their level of management?
I think operating in Nigeria, you have to be fairly efficient to survive, and most of these companies have a long history in Nigeria and most of the issues. And 40% of most costs for most of the industrials is power, and once the power, and that is one of the biggest cost factors. And what has happened in the past, that most of them either on, if they change to gas, which has been a fairly low price, although there's been attempts by some of the gas suppliers to increase prices recently, which have been led to negotiations between the Manufacturing Association of Nigeria and the gas suppliers, with the National Assembly stepping in as well to try and limit the rise in gas prices. But also, worldwide diesel prices have fallen from the highs we saw in 2008, and that is affecting most of these companies that run on generators. So when diesel was going at 150 naira per litre 18 months ago, we're now down to about 100 naira per litre, and that has a significant effect on their costs. So from that front, their cost efficiencies, and we're seeing that in their profit growth.
Well, I was going through a few market reports, and many many traders have said that industrial stocks have attractive valuations. They're currently trading at considerable discounts to their fair value, given the expected cash inflows and increased profitability. What would be a stock pick for you amongst the industrials right now?
In industrials, they are very attractive at the moment, and the main reason is that because the majority of the market is the banking sector, the fall in the banking sector last year led to a fall across the whole sector, reduced confidence in the economy on a whole. But I think with the banking reforms put in by CBN, which is targeted the banking sector, people have started looking at other sectors with a more separate from the banking sector, and that has led to the continued growth. I think in the industrial sector, you have to look at the multinationals. A lot of them have shown been operating in Nigeria for a long time, and they've shown good strong growth in revenues as well as in profits.
Well, militants' activities in the Niger Delta have in the past led to a near collapse of the economy, of course following the decline of oil production and demand by advanced economies as well. There are new rumblings that we've heard emerge out of the Niger Delta. How much of a threat to the economy and so to this increased profitability you speak of are we expected to see, or does this pose moving forward?
It poses quite a serious threat. Not only not only in terms of political risk. I mean, any violence in the Niger Delta, especially if it affects oil production, because oil is still the mainstay of the Nigerian economy, will affect the economy in a significant way, especially in the 2010 budget and what's been planned in terms of output as well as the price of oil. But you also got to look at it from the issue of gas. There's been a serious move towards using gas to power plants, as well as a lot of industrial companies. Now, if any disruption to those gas supplies from the Niger Delta will lead to companies having to use either diesel or LPFO, which is more expensive than gas to power their industries, and will lead to them increased costs. So there are going to be serious effects on that. But also the insecurity it will bring into the economy, especially in the current political template, is not going to help.